Hello and welcome, and it's Friday, 8th of June, 2018. This is a stock code, ticker symbol DOL on the Toronto Stock Exchange and that of Dollarama. Of course, everything within your own risk and reward, and I don't play the stock market, so I'm taking no risk. Thus, I'm getting no reward on any movement of this chart. So in the daily chart, it had a decent down day, but notice these gaps that it has with candles. The lines you see, and most people already know this, but if not, I'll just state this in here. When you see a line up or lower, that means within its period, and thus on the daily time frame within that day. Say, for example, on March the 29th, the price had rose up to about 164 and change, as the line would indicate. On the lower end in here, we can see that the low was 145 on this day in the middle of April. When you see a green candle, that means the close is the upper part of it and it opened on the lower part of the colors, and the opposite on the red candles. So on March the 29th, the market had closed at 155. So during the point when something's closed, thus nothing should happen in that spot. Interesting how markets close, people will be allowed to trade, and then this thing, as it quote unquote gaps higher at 160 on that particular day. So on this day here, the market would have opened at 148 yesterday and then closed all the way down here, which means on the single hour time frame, you can see like on the June the 7th date, it finished 3:30 p.m. Market closes at 4 up at this point in here. And then that news came out, and I'm going to show you in a second. That's bad for Dollarama. Price goes down, closes at the lows of the day, and then it just starts up here in big move. Of course, a big move for stocks is going from 146 to about 152, 153. That's a difference of about 5-6%. Within Dollarama, it says here that the prices may rise due to Canada's retaliation tariffs. As there's a tariff war going on between U.S. President Donald Trump and Canadian Prime Minister Mr. Trudeau. And I've heard Jesse Ventura talk about politics is a lot like professional wrestling, where you may think behind the scenes that these individuals hate each other. Yeah, professional wrestlers will go out, have a beer together and all that kind of stuff. Let's just say I don't understand the kayfabe too well amongst politics. But the Dollarama, which is very similar to the Dollar General in the United States, although the chart is not, this one has went up a lot more than Dollar General has made it so that a lot of people in the Americas anyway, and I'm sure that these stores probably exist in other parts of the world, that sell items for significantly cheaper, bring a lot of extra people in because they just can't afford to do anything but get the lowest possible prices. And stores like this allocate such a situation. Technical analysis in here says the more often support is tested, the more likely it is to be taken out. And that's just more likely. It's building a strong base in here at 147. And it's having several levels of resistance. 4 different ones now. You got this high from November of last year, and then a little bit higher in the end of January, and then lower on both of them on the March 29th push. And a few days ago, before the fall, this high, each one noticeably at a different line than where the previous one was, making the range of highs between 158 to 169. Thus, in the trying to define the sideways range. But when you look at the size of the moves, like what happened on this particular day here? December the 6th, the market went all the way down and and then recovered such. I can quickly take a look at this on the hourly time frame, December 6th. So see, I don't know how the bid-ask works on stocks. See, I don't know if one in here could put a buy order in for like 137, and then would they get, obviously they should get hit if they had the buy order in on that particular date. Because I know in the cryptos, buy orders and sell orders, trying to get the lower levels, just putting in buy orders, and sometimes they hit, sometimes they don't. This would be a spot where buy orders would hit. But it's really common in the crypto space to have situations, more so to the upside like this, where a market will have a big move and then come right back to where it came from. In cryptos, again, it's more likely you would have a good rally higher for a big line that comes back to where it comes from. But anyway, continuing on with this. So the daily time frame obviously had this big break of established resistance earlier last year, and around this 100 level, we can see that when it broke it, it had a very nice leg higher. We can see in here that they have dividends. It's been about 11 cents. I guess you have this on 7.5, and then so every 3 months, so about 40 cents a year. Yeah, it's a little bit of extra income for holding such a thing, but long term, this is the monthly chart. So weekly chart, it's a consistent uptrend. Nothing more else to say about this. And is it a surprise that a company like this has went from basically under $10 to over $150? And that's still just a 15x gain, which is really, really good. And I say still just because it's actually well in a bear market against Bitcoin, but everything is in such since that time pretty much, because Bitcoin has done much better than 15 times gains, especially when we look back in this time frame when Bitcoin, well, I think the first ever Bitcoin transaction recorded was something like 10 or 20,000 Bitcoin for a couple of pizzas. Yeah, that's when Bitcoin was like 10 cents. Well, back when Bitcoin was like 10 or 20 cents. It's had gains now of about 70,000 times higher. Anyway, solid uptrend. And there's really no surprise for this. I would think, as long as the stock markets as a whole don't have a major decline, that there probably isn't that much concerned on the long-term time frame. With that being said, you could say, man, it's been up so much in here, and we have all of this empty space that this thing, even on a bullish level, could come back down, establish some of this fill here, have a long, intermediate to mid long-term, or short long-term rather, bear market, and then correct from there. And it would suck to buy at 150 and then have it go much lower. See, this has been the case for the entire run. I'd be saying the exact same thing in here as well. But all of this empty space. But it hasn't done it as of yet. But if you think about the psychology of a global market fall and the psychology of a global market rise, where the S&P and the Dows and pretty much the entire space of stocks go up or down together as a whole. Well, if another event like 2008 happens all over again, where stock markets retrace 20, 30, 40, 50%, this one's going to be no exception. There's always going to be fear amongst the holders that, oh, this thing would be rolling over. That's going to force people to sell. There's going to be a lot of people who are like, heck, I'm glad to get some profit on this. And there's always that level of concern when a market goes significantly higher, that there's a bunch of people that bought here, bought here, bought here, and are writing very, very good profits. And for those that are still in, still with good profits, and They see a market like this, it start maybe breaking down close to around the 100 number, and they're like, oh my goodness, this thing's got a bearish setup. Well, good thing I got a profit in here because I bought, say, somewhere back here at 30. That's still a 3x gain or whatever it might be. And then, of course, that would contribute to a good company, at least short-term, mid-term, having short-term losses. Case in point would be Apple. Now, Apple, from its 2008 lows, was $11, $12. Now it's near 200, pretty much close to all-time highs. And at its time frame, before the 2008 fall, you could be talking a lot again about all of this empty space and how there can be a lot of profit taking. And if the markets go down together, then it'll go down. And when they go back up together, they'll all go up. And it gave back a little bit in this case. But a little bit was going from 26 down to 13. So just like cryptos, and this is a long-term chart looking at weekly, but a small move can be a decent size play within a portfolio when it loses 50%. And of course, how much it can gain, because when you look at it from the perspective of mathematics, if you're like, man, I think it's smart to buy here at 16, 17, and now you've seen it at 50, I can triple up, and that would be a profit. But of course, when we see it at 50, and this is close to 200 now, it's basically had about a 4x gain within that time. And technically speaking, as far as how this is looking now, I do think that this is ready for another leg higher. And again, I'm not trading in any stocks, but the last significant nice leg higher came here, and then it's grinded its way a few higher highs since then. But you have this significant move, sell off to the 18. Nice little small move again, sideways correction, and another price correction that traces itself back fast to this level, but is unable to hold, chopping around for a few weeks. This week in here, a statement week, as it was saying, yeah, enough of this correcting, I'm ready to break out. But it only managed to make it to the upper end of this level. But what has followed in here is now 5 days in consolidating this at such a very bullish level. This week has got it's the highest level it's ever been. Price has been up to 194.20. That's an all-time high. Is today an all-time high day for it? The answer is no, because there was a small gap lower. The all-time high came yesterday when it gapped open at 194.14. But even if we look at the situation, what we see on the weekly from here, decent sell-off, back to the range. Decent sell-off, back to its range again. And now this is what I would define as showing strength amongst an 18, with the 18 in itself showing that good pattern right now. So to have this consolidation within for about 5 or 6 days, have this nice little breakout, come back to its band, there's really only one of two things that it's setting up. And that is a decent leg higher from, of course, the breakout in the 180 to 184 range, and it's just basically starting it. Maybe it's got a little bit of retracement room back down to this 18 again. The lower end, maybe 189 short term. But if you see a market like this leaving the 18 with momentum, I'm going to be expecting that it's going to be poised soon to break above this resistance and test some areas of new all-time highs into the 200s or so area. Now, Apple has done a very good job in technology for helping so many businesses and people out so that they don't need employees. And I say that as in, Maybe you have a home-based business and you use a computer. Apple might be one of those. And that Apple computer can do so much work for you that you don't even need any or that many employees within your job. And of course, so many robots have made it easy to do the jobs that humans used to do. And it's a shame for me that I don't hear world leaders talking about technological unemployment and strategies we as a human society will need to adapt to the steadily changes happening within the world. And I'll finish this video off by stating that Canada is shedding jobs in May, but wages grow by the most in 6 years. Of course, with inflation, that's been continuously going higher. I remember as a kid talking to finding out how much is minimum wage. Oh, my cousin's got a job here. She's getting $3.50 an hour. And then, of course, I'd hear about people back then working for $1 an hour, not that many years before. Or, okay, amount of years before. Anyway, the Canadian economy unexpectedly shed jobs in May. See, we should be taking that UN out, because technological unemployment is real. So we should expect jobs to be shed 1 by 1, 10 by 10, 100 by 100. And they're declining in the manufacturing and construction sectors. Though wages grew in the strongest annual pace in nearly 6 years, data from Stats Canada showed on Friday. 7,500 decline in employment contracts with the forecast for a gain of 17,000. That's a big differential. The unemployment rate held steady at 5.8%. So we lose jobs, unemployment rate stays the same. Yeah, I get it. Hourly wages rose 3.9%. Unemployment rate's a lot higher than what it used to be even 10, 12 years ago. Or minimum wage, I should say. I'm saying unemployment rate because it seems like that's what a lot of people are moving towards. But the Bank of Canada has said it's closely watching income growth as it considers whether to raise interest rates again next month. Interest. Of course, we're in a debt-based system, so it just goes with the monetary model, one that is a faith-driven system. Of course, what the requirements or parameters is for a change from yes to no in faith en masse by the human species to change such an event, I don't know how that's done. But the decline in jobs last month was driven by a 31,000 drop in full-time positions, while part-time positions rose. And that's just normal within these world bases, making it very difficult for people to sustain, making it difficult for them just to pay bills and really live for that matter, which is why places like the Dollarama, Amazon do very, very well. On a sector basis, good producing industries led the way down with an 18,000+ decline in manufacturing jobs and 13,000 drop in construction. And I'm going to finish this video off just showing the DJI, the Dow Jones Industrial Average, which has developed a major level of support here around 23,000 and change. 4 times hit. Once so on February the 9th. Again on March the 22nd. For a few days around April the 3rd. And again on May the 3rd. Resistance. Well, I like to draw these little lines in here, and you can see how this has been the resistance, but it's changed now. So downtrend, uptrend. Still got some levels that need to get above. I've drawn in some key Fibonacci levels. It's at a key one now. But when you have a market situation that has a very good move, and then you get the combination of the price and time correction and such, which it has had, that when you can see it hold and stay above an upper area of its sideways range for a decent amount of times, then that is most certainly a productive signal. When you see it breaking established resistance, which has been once tested at the 26,000 and change level, 26,400, 500 rather, then you're ready for decent sized moves, because when you break a key level, then usually they just go. 14,000 or 14,200 was a big level on the Dow. because 198, I think it is, was the 2007 highs. Let's see how well my memory is. When I know that's the number that it is, so let's just see if this one has it. And this is memory going back to like 2008. 14,198.10. I should not have memorized that. But what happened on a break of that resistance? Let me just place a horizontal array here, and so there's the test a little bit before, but I mean, great obvious gain since the play. It also had this other level established here at 18,300. Even up to 18,600, which spanned from the end of 2014, breaking out near the end of 2016. So close to 2 years within this choppy sideways range with a couple violent spikes to the downside. But when it broke that range of resistance, look at the move that happens. That's technical analysis for you. Key levels of support and resistance tested quite often like that can give a lot of good setups, and knowing that when you break it, good size moves. So that's the case here with the stock market here. That would be the case with Bitcoin at 20,000. And I'd like to thank you for tuning into this video. Most people, of course, are crypto based, as that's where my channel is derived from. And yeah, this was just done because I read an article today that Dollarama was, well, the article that I shown here, that I thought, let's just take a look at the stock, and I thought maybe make a video upon it because I can. Take care. Bye-bye.